Mullen Automotive just pulled off what might be its most shocking move of the year, a 100% jump in share price, in one day. After months of relentless decline, dilution, legal messes, and reverse splits, MULN surged on Monday to close around 34 cents. That's double what it was trading at just one trading day earlier. And if you bought in last Friday, well, congratulations. You might have just made the best trade of your investing life. But before we start celebrating, let's break down what actually happened, and what still threatens to bring this company right back down. First, the stock surge. Mullen released preliminary second quarter results showing around $4 million in vehicle sales and a net loss of $53.9 million. That might sound bad, but compared to a $171 million loss in the same quarter last year, it's a huge improvement. It was enough to spark some optimism, especially among retail investors still hoping for a short squeeze. That surge in volume, combined with the still heavy short interest, likely played a role in triggering Monday's rally. Now here's the catch. At the exact same time MULN stock was doubling, its subsidiary, Bollinger Motors, was being placed into receivership by a federal judge. The founder, Robert Bollinger, filed a lawsuit alleging that Mullen defaulted on a $10 million loan he personally issued. The court sided with him, and now, Bollinger's assets are frozen. That includes their Class 4 electric trucks. The company has just 30 days to come up with a debt repayment plan. So while Mullen stock was mooning, one of its core EV brands was being locked down by the courts. And the problems don't stop there. Mullen's market capitalization is still well under $35 million, which means the company remains at risk of being delisted from the Nasdaq. Back in February, Nasdaq sent a warning. Mullen had been below the $35 million threshold for 30 consecutive business days. The company now has until August 25, 2025, to fix that, not just by crossing $35 million temporarily, but by staying above that mark for 10 consecutive days. Right now, even with the stock jumping, the market cap hasn't crossed that threshold in a meaningful way. That means Mullen is still very much on the chopping block, no matter how good Monday felt. Let's be clear, what happened this week was exciting. It brought energy back to a ticker that's been absolutely wrecked over the past year. And for those who bought in at rock bottom, it may be one of the best short-term trades they'll ever make. But the fundamentals haven't changed. The company still faces massive dilution pressure. It's still relying on PR pushes, legal distractions, and flashes of revenue to keep the lights on. And now, it's got a core subsidiary in receivership. That's not a turnaround story, that's a balancing act on a tightrope, with a ticking clock in the background. For now, enjoy the green. But stay sharp. Because at Mullen Automotive, the line between best trade of your life and next delisting announcement is thinner than ever. Thanks for watching. Like, comment, and subscribe if you want clear, honest takes on the wildest corners of the market. And let me know, was this the beginning of a Mullen comeback? Or just one more bounce before the bottom finally gives way? We'll find out soon enough.